So good morning, everyone, this fine and bright Monday morning. Welcome to your weekly market snippets with me, Geoffrey Gishanga, educator and market analyst at Scope Markets Kenya. So I hope you all had a very spectacular weekend. And as we get into this new week, it's important we get to look at what are the key events that happened during the previous week, and what are we really anticipating for in the new week starting from today. So walk with me as I take you through all this. So highlights of last week, we had the New Zealand CPI, we had the European Central Bank monetary policy statement, we also had the US unemployment, we had US unemployment claims. Also we had corporate earnings, by corporate earning releases by some of the major companies. We had Coca-Cola, we had Tesla, and Google. So I will be taking you through the details of what happened the previous week, and also what to anticipate this coming week from the start of this week today. So as we start off, we had the New Zealand data came out last week, the consumer price index, which rose by 2.7% in the 12 months to up to June 2025, up slightly from 2.5% in the March 2025 quarter. So economists had anticipated a slightly higher increase of 2.8% to 2.9%, suggesting that inflationary pressures remain contained but persistent. Then you had the European Central Bank. The European Central Bank released their monetary policy statement last week. We had the European Central Bank Governor Christine Lagarde released this monetary policy statement within last week. That was on Thursday. So the European Central Bank opted to maintain its interest rates at 2.15%, its first hold after a year of tightening. So inflation is currently at the ECB's 2% medium target, giving policymakers room to monitor risks such as the US tariff threats and sluggish Eurozone. So you remember there was a revised tariff report from President Donald Trump, which is meant to start off from the 1st of August, which is now this week. So that will help us be able to understand and see how that is going to affect also the Eurozone. Then we had the U.S. labor market. We had the U.S. labor market update. But before that, the rate for the euro remains far below its 2023 peak of 4%. Analysts expect at least one more 0.25% rate cut before the year end, possibly during the September ECB meeting. However, it's not yet confirmed. It's more of a forecast, so it's something we have to wait and see until that time. But so far, the rates remain at 2.15%. Now, coming into the U.S. labor market update. So we had the initial jobless claims for the week ending July 19 fell by 4,000 to 217,000, underscoring continued strength in the U.S. labor market. So the 4-week moving average declined to 224,500 from 229,500, maintaining a consistent trend of low unemployment and stable hiring despite macroeconomic pressures. Then into the earnings sector, we had corporate earnings roundup starting from Coca-Cola. So Coca-Cola delivered better than expected second quarter results, buoyed by strong performance in the European markets. So here are the numbers as follows. So we do have the earnings per share adjusted is $0.87 as compared to the estimated $0.83. Then the revenue is $12.62 billion from the expected $12.54 billion. So the net income surged to $3.81 billion, or $0.88 per share, up from $2.41 billion, or $0.56 per share in the second quarter of 2024. That is last year. So shares dipped slightly in pre-market trading. Then we have Tesla. So Tesla posted another challenging quarter, with automotive revenue falling 16% year on year, and earnings once again trailing analysts' expectations. So the numbers are as follows. So the earnings per share, we do have for Tesla is $0.40 versus the estimated $0.43. Then you have the revenue is $22.5 billion from the estimated $22.74 billion. So the CEO Elon Musk signaled potential turbulence ahead, citing tariff pressures and the expiry of federal EV credits. So automotive revenue dropped to $16.7 billion, with regulatory credit sales halving to $439 million from $890 million. So there's a very huge gap. There, and also we've seen how the tariffs have been affecting the EV market. So definitely, Tesla is one of the companies that have taken quite a huge hit in this kind of scenario. So shares declined over 4%. Shares declined over 4% after hours, following a cautious earnings call, which happened last week. Then we also had Google. Google also released their earnings report last week. So Google exceeded Wall Street forecasts and announced a major increase in capital expenditure for 2025, signaling intensified investment in AI and cloud infrastructure. So we all know how most companies right now are heavily invested in artificial intelligence, which is AI. So the numbers are as follows. We do have the earnings per share, $2.31 from the estimated $2.18. Then you have the revenue is $96.43 billion from the estimated $94 billion. So the segment highlights we do have, we have YouTube ads. YouTube ads bringing in $9.8 billion versus the estimated $9.56 billion. Then we have Google Cloud. Google Cloud, $13.62 billion versus the estimated $13.11 billion. Then you have TSC, which is traffic acquisition costs, bringing in $14.71 billion versus the estimated $14.18 billion. So overall, the revenue rose 14% year over year, outpacing expectations of 10.9%. So shares climbed 3% after shares climbed 3% in after hours trading. Some of the key takeaways we had from last week's major events is that the New Zealand inflation edges higher but remains in the Reserve Bank of New Zealand's target zone. Then the ECB is now in a holding pattern amid inflation stability and external risks. Then you have the US labor market continues to show resilience. Then under corporate earnings, we do have corporate earnings present a mixed picture. So we do have Coca-Cola beat expectations with strong profit margins. Tesla, however, faces growing macro and regulatory headwinds. Then Google, which is Alphabet, remains a tech earnings standout, backed by its AI pivot. So recently, or let's say even most recently, we've seen how most companies are adopting AI into their systems, into their platforms. So AI is something that is here to stay, and it's something that is one to closely observe. Okay. Then coming into what we are expecting into this week, starting from today all the way to the 1st of August. So this week we'll be looking at a number of major events happening. And starting from tomorrow, which is Tuesday, July 29th, we will be having the USD JOLTS job openings. So its impact area will be the labor market and hiring trends. Then we have on Wednesday, July 30th, we will be having the Australian CPI inflation report. So that helps in the impact area will be inflation and AUD volatility. Then also on the same day, we will be having the USD ADP non-farm employment change. So the impact area will be the employment preview. So we'll be looking at the labor market and both employment and unemployment. Then also still on the same day, we'll be having the USD advanced GDP for Q2. So the impact area will be looking at the growth outlook of the economy and market sentiment. Then still the same day, we will be having the Bank of Canada monetary policy report. And there we'll be looking at interest rates, monetary policy, the Canadian dollar movements, and the rate guidance. Then we do have the USD FOMC report, so which is the federal funds rate decision. So this week is quite important, especially for the dollar. We will be expecting to see, will the Federal Reserve either maintain their rates, will they cut their rates, or will they hike their rates? We've seen quite a lot of pressure from President Donald Trump on the Federal Chair Jerome Powell to insisting that he should cut rates, something that we have seen take place since the moment he took office. But then we still have not seen Jerome Powell bow to that pressure. He still maintained on not cutting rates yet. So even during when there was a statement from the White House that President Donald Trump was likely to fire the Fed Chair Jerome Powell. However, he mentioned that he was unlikely to do so, so not anytime soon. However, the pressure still mounts between the President Donald Trump and the Federal Reserve Chairman Jerome Powell. So this Wednesday, we will be waiting to see the result of the FOMC, Federal Funds Rate decision. So that will be looking at monetary policy. We'll be looking at global risk sentiment, also observing the impact on the dollar, because that is one major news that everyone is waiting for, from traders, investors, and anyone who's closely observing. We have traders, investors, speculators, anyone who's closely observing the movements of the dollar to be able to make a decision on what or where to invest in. Then on Thursday, July 1st, we'll be having the Chinese manufacturing and non-manufacturing PMIs. So the impact area, we will be looking at the global demand and also the risk appetite. Then still on that Thursday, 31st of July, we'll be having the Bank of Japan monetary policy from the BOJ. So again, for the Bank of Japan, we've seen their interest rates remain below zero for a very long time, below negative for a very long time. So let's wait and see what the Bank of Japan monetary policy comes out on Thursday. So the impact area we will be looking at is the monetary policy, definitely for the Bank of Japan, which will affect the Japanese yen and all currencies paired to the Japanese yen, and also looking at the yen volatility and the regional liquidity, and also definitely the rate of inflation for the Japanese yen. Then we will be having the USD core PCE price index. So that is still happening on the same day on Thursday. That is the core PCE the impact area will be on inflation indicator and the Fed policy as well. So then you have the USD unemployment claims, that is the weekly unemployment claims, still on that Thursday, which definitely measures the labor market stability and unemployment. Then on Friday, the 1st of August, we will be having the anticipated non-farm payrolls, which happen monthly every first Friday of the month. So this will be measuring the job market, which is the labor market, on all sectors apart from the agricultural sector. We'll be looking at market moving employment data. We'll be looking at the stability of the labor market. So also on that same 1st of Friday is when we will be expecting now the revised Trump tariffs to start taking place, as it had been mentioned. So the 1st of August is when the revised Trump tariffs will be officially taking place. Remember, we have seen him revise tariffs on 14 countries within this month. So as we get to step into the month of August, starting from Friday, the 1st of August, this Friday, we will be eager to see, will those tariffs be affected, or will countries also retaliate with their own? Will other countries also give their own retaliatory tariffs? So this week is quite very key in the markets to be able to observe some of these key aspects that will be able to move markets and also move the various pairs that you're looking out for volatility. Then the market outlook we are looking out for. So with major central banks, the market outlook we are looking out for, with major central banks entering the data-dependent mode, This week's calendar holds high impact news that may set the tone for markets in the third quarter. So, for example, we do have the FOMC's rate stunt will be crucial for the USD direction and global risk assets. So, this is one of the most anticipated FOMC reports that you're having this week, especially after we've seen the pressure on the Fed to be able to cut the pressure on the Fed from the White House to cut rates. So this will be one of the most anticipated FOMC's reports. So traders, investors, speculators all across the globe will be waiting to hear the Fed stance on interest rates and inflation. Then, because that will be crucial for the direction of the dollar and also global risk assets as well. Then we also will be looking out for NFP and ADP figures could shape expectations for the Fed's next moves. So as well, this week we do have the FOMC and we also have the NFP, two very key economic data releases that will affect the US dollar. So this week, expect quite a lot of volatility on the dollar. Then you have inflation readings from Australia and the US, that is now the PCE, will guide monetary positioning in their respective regions. Then lastly, we do have the policy updates from the Bank of Canada and the Bank of Japan. They bring surprises on the FX front. So this week is this week we do expect quite a bit of volatility, especially on dollar pairs, the Canadian pairs as well, due to the Bank of Canada, the yen pairs as well, due to the Bank of Japan. But mostly we will be looking at the Fed stance on interest rates and inflation. Then we also will be looking out for the non-farm payroll numbers, which will be able to guide the direction of the dollar and the global risk asset sentiments, and also the effect of the revised Trump tariffs, which are expected to start on the 1st of August. So thank you guys for tuning in to this session, and I wish you all a very, very, very productive week ahead as we start off from this week. Let's start it with all the energy, and let's have a very, very productive week ahead. So thank you, everyone, and I'll see you on the next one. Thank you.